Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, so daily chart. We'll be on this for just a moment. It's a continuation chart, so you see this little hop. That is the September contract rolling over into the December contract. You see the daily mid-band here. I can turn it into a December chart real quick. That's the new front month. And, you know, I mentioned this on our subscriber evening webcast last night. You got this 97 half high, and they pulled it back for a few days. What you're slowly seeing here is the 20-day go support from where it had been resistance as far back as, August 25th. August 4th. What am I talking about? The month of August was a sell rally situation. You see a lower high here, and they really had an opportunity, and you can see it when we go to the hourly chart, to really dump it. They didn't get it done, and now you're seeing, consecutive days closing above the 20-day simple. Right now we are jammed between the weekly pivot and the monthly pivot as far as the current trading range. So hourly chart, weekly pivot, 45 quarter, 45 25 quarter, monthly pivot, 45 46 quarter, and we're kind of jammed in there. You can see how tight the Bollinger Bands are getting. So, 25 to 46 is a range trade until it's not. They tested it about 8 o'clock in the morning. It held. Now we're up to 29. If that continues to hold, you want to be long above that. If they can't get through the monthly pivot and you see, resistance build, kind of like it did yesterday off the open, then, that's an opportunity to be short against the monthly pivot. While we're jammed within these 20 handles, and I expect it to stay jammed within the 20 handles for the majority of the day, maybe all the way into CPI tomorrow morning at 8:30. The tighter these bands get and the longer this goes on, the more volatility you can expect tomorrow morning at 8:30. But if you break down yesterday, it's what we've consistently seen. It's consistent with what we just talked about on the daily chart with the daily mid-band. 11 o'clock, it comes in, and it's trying to convert weekly pivot. And if it can do that, then it has an opportunity to get down and go see the 50-day and do some of these other things that it was not able to do previously. But they had done a pretty good job of doing, Friday, Wednesday, Thursday, and Friday. So if you turn this into a front month chart, and this is why I hate the roll. A roll with a 50 handle spread, which is kind of crazy. So this is a better interpretation of what I'm talking about. So we're jammed between the weekly and the monthly, okay? They tested the 9. The 50 is above them on the December, just like it's above them on the September. You start turning things into continuation charts and things get iffy. It battled over the weekly pivot yesterday, made its decision. It's battling over it again. If it can convert it, then it can get back into the 20-day. This is what the bears have to do. They have got to deal with the 20-day. They tried on Friday, and they didn't get it done. The reason we're up here dealing with the 9 is because we failed at the 20 Friday morning. So as long as the 9 is resistance, as long as monthly pivot is resistance, that's the top end of your trading range. Feel very comfortable. Don't anticipatorily short up there, but an inability to get through there, the risk reward is decent for a move back down. By the same token, let's say we fall out of bed, we lose the 45 to 65 range, and we come back into, call it 45.04. Nice little short down, first of all, against weekly pivot. Secondly, if you get back down to the green line there, to the 20-day simple, and they can't get through, similar to Friday, that becomes an opportunity to be long for a move back up to weekly pivot. So when CPI comes out tomorrow morning, and we'll talk about that before the CPI report. Certainly I'll talk, the subscribers, we're going to do another webcast tonight, and I'm going to try to get one out before the report tomorrow morning. Certainly if the reaction is to the down off of CPI, but it has an inability to take out the 20-day, well, there's your trade right there. If it can't convert that area, you want to be long against that area. So that's just, that is some very basic what has been working and what has not been working. If the bears can convert 4,500 to 4,505, it starts to open up some deeper areas for a trade. The problem is so many of these have turned into dip buys. And you're starting to see some separation now where you hadn't seen it here. You're starting to see a little bit of separation with regard to that daily mid-band. What I would say to the bulls is, I don't think you really want to go back here. I think you want to, fight over this, that's fine. You start coming back here and you may regret it. Because it's certainly not the environment that we've seen in so many other years where it's like, oh, dip buy, off we go to the moon. We'll talk about pullbacks in a couple weeks. It's not that kind of tape. It is much more two-sided than that. And as far as the function of actually trading it, you can't get greedy with your runners. You can't. You cannot get greedy with your runners. We were short 37.5 yesterday. We took 14 on the runner before, we got into this little battle around 22, 23 yesterday, and we ended up long in the 22, 23 area. But the best decision I made all day was taking that 14 handle runner. You've got to book that. You've got to book that. We had a couple of long runners last week, but I also had a lot of runners get round tripped. So, learn from that. Learn from that. Okay. I think that's a decent roadmap for the day. And heading into CPI tomorrow, a couple things to look at. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.